In less than a month, parents of kids 17 and younger will either be getting $250 or $300 per child per month from the IRS. The child tax credit is an advance payment on what would be a tax credit in 2022. There are all kinds of questions out there. So joining us today to answer them is Scott Braddock from Scott Braddock Financial, J.W. DeGance from the district manager in Greensboro for Jackson Hewitt. These are our two experts to get your questions answered. Here's how you do it. You text those questions. The number is on your screen right now. It's 336-379-5775. Remember, this is a text only, so please don't call, but please do text in your questions. All right, first and foremost, let's talk about how big this tax credit is. This is something that you would have filed on your taxes for 2021 in 2022. JW, let's talk about the total payment.
Yes, so for children that are 5 years and younger, it's $3,600 total. And then for 6 to 17, it's $3,000. That's the total credit.
All right. And so as we're going to be going through these payments, which start in July, they're only going to be able to claim half of what that is. So what are they going to do once the other half comes through? Scott?
So the other half of, there's payments start, of course, July 15th, and it's going to be $250 for those children 1 to 5, and then $300 6 to 17. So obviously that's not going to pay out the total amount that they're entitled to between now and December. So they'll receive the balance when they file their taxes in 2022, the remaining amount there.
All right, and let's take a look at that child payment schedule so that you'll know what we're talking about. These advances on the child tax credit, they start July the 15th, and then they run every single month on the 15th, except for August, of course, because that hits on a weekend. All the way through December 15th, you will get a monthly payment. And that, of course, is you will get a monthly payment unless you opt out or what they call unenroll. So, JW, kind of talk a bit about why people would want to unenroll.
Well, first, if you are typically a taxpayer that qualifies for this but typically owes money at tax time, you may want to unenroll because this credit has been giving you money towards your balance due, and so that will increase your balance due dramatically. Or increased in if you make more money, increase in revenue this year for you. Or if you alternate children, claiming children, that's another reason why you might want to opt out.
Okay. All right. And so the way that you opt out is you actually have to go to the IRS and you have to opt out on one of their portals. And that deadline is June 28th. So that's Monday. So if you don't want that payment, you have to opt out by Monday. Let's take a look at those three portals so that you are able to see what kind of helps are available to you through the IRS. First and foremost is the eligibility assistant. And so that helps us figure out, should we be getting this credit? Is that right, JW?
Yes, it does. It asks you some very basic questions to see if you are eligible for the credit.
All right, the non-filers tool is for those who don't actually file taxes, and so this is so that you can get your information to the IRS. And then the last one you see on the screen is the credit update portal, and that right there is how you unenroll. Scott, already we have a question from somebody about, is the portal to add a new baby ready yet?
The one to add the new baby, that's going to be the one where you update your status. And so that one has not come up quite yet. That's the one that we're waiting on.
Yeah, and we're kind of thinking that it was going to happen this week. There's still one more day in this week. Who knows? We'll see what happens with that. Okay. So the other thing that we want to talk about when it comes to the numbers of all of this is, why are people getting this money? So a lot of people are like, the government's just giving free money. So Scott, let's kind of talk about where this money comes from.
Well, look, I just think it's fantastic that the government has come up with this plan to put this money in many Americans' hands that really need it. Now, you can consider it free money. That's fine. I mean, it is a credit that you get, a qualified credit that you get on your tax return. So if you end up owing the IRS money, it's going to go towards that debt. And if you don't, it's going to be a refund, which is another reason that folks are opting out, is because they're used to getting that significant refund and they don't want to miss that.
Gotcha. Okay. So already we have a question, JW. This person says, is there a minimum or maximum income to get that credit?
So there is no minimum income level for this credit. It doesn't even have to be earned income. There are maximum level of earnings that will start to phase out. So if you're single, it's $75,000. When it starts to phase out for your AGI, $112,500 for head of household. And then for married filing jointly, it's $150,000 is where it begins to phase out.
All right, and if you're kind of on the bubble of one of those, you're not quite sure, then should this be one of the things that maybe you opt out so that you don't have to pay Uncle Sam at the end?
Possibly.
You know,
Go ahead, you both
ahead.
can answer. Go ahead, JW first, and then we'll get Scott.
Possibly. It really depends on a lot of different factors, I'd say.
yeah, one interesting thing with that is that there are some folks that really could benefit from that, but because of their income, they're not going to. They're either going to be receiving a lower amount, or they're going to phase out because they've earned too much income. So one strategy could be to contribute more to your 401k. Max out your 401k. That's going to lower your income. It could potentially make you eligible for more of that enhanced child credit.
Yeah, and that's kind of a win-win, right? You max out your 401k, you're putting more money away from retirement, takes down your adjusted gross income, plus you get the child tax credit. Okay, we're going to continue to take your questions and get you answers. We'll be right back in just a few minutes.